fine. So my screen is visible. My desktop is visible. It was in pause mode. I'm starting the recording. So in the last class, what happened? So my voice and screen is visible.
Yes, sir.
Okay, fine. Please tell me. Actually, don't type. You are supposed to tell. It should be. It is a purely interactive system. I am not able to see your typing because I am sharing the screen. So I have already shared the SAP screen. So your typing or anything is not visible to me. I have to go to the initials. That means the screen, the initial screen of your Google Meet. Otherwise, I cannot see. So this is the easy access. I have to go to the foreign currency table. Yesterday we had discussed the foreign currency table. So this foreign currency table is a place where we update the foreign exchange rate between the foreign currency as well as the domestic currency or company code currency. Okay, rate of exchange between the foreign currency and your company code currency. And this foreign exchange table, it is not in FI or financial accounting new or controlling. It's not there. It's in SAP NetWeaver. So if we try to open the NetWeaver, we click on the node SAP NetWeaver, then we click on the general settings. Here, if we click on the currency, then there is a area called enter exchange rate. Actually, there are different exchange rate types. What I have discussed in the last class. One is B type, another is G type, another is M type. B type is the bank selling rate, G type is the bank buying rate, M type is the average rate, right? So bank selling, bank buying, bank average rate, these are discussed in the last class. And there was also translation ratio, that means base of the two currencies, that means weightage. Okay, the weightage is USD INR, the weightage is same. Your euro versus INR, the weightage is same, 1:1 ratio. Okay, ratio is 1:1. Then finally there is a enter exchange rates, right? So this is the table. Fine. Now if I want to see the exchange rate type M means average rate. We are using the average rate now for my demonstration. From currency is USD, to currency is INR, right? So first one is your foreign currency, second one is your local currency or company code currency. I want to see how much is the how much INR for $1. So click on enter. So once I click on enter, I see this is the latest rate, right? Automatically it is on the top. Once I search, this is coming on the top. 1st November. Here $1 is equal to 81 rupees, 81 INR, right? The ratio is 1:1. So this is called direct quote. So there can be indirect quote. Indirect quote means 1 INR is equal to how much US dollar. That is an indirect quote, but it is preferable to use the direct quote for convenience purpose. Now, in the last class, I have also demonstrated how when you are posting a transaction in foreign currency, how the value is picked up from this table. The latest value is picked up from the table. And also manually also you can pass the transaction. I am opening another session. So in the first transaction, you cannot enter manual values because no screen or no field is available for entering the manual value. And in another transaction code F-02 that you can enter the manual value. Okay, so that is the difference between the two screens, where in one place you can get automatically the value, for example FB50, right? In this FB50 screen, you cannot manually give the exchange rate. Automatically you have to change the currency here. Whenever any foreign currency transaction is posted, then automatically it will be converted into INR for the purpose of balance sheet and profit and loss account, and it will pick up the latest rate. Again I am opening exchange rate type M USD INR. Okay, it will automatically pick up this rate, right? So now there is another screen where manually we can put the value, right? So what is that screen? In FI accounting, financial accounting, general ledger, document entry, this one F-02, right? Here there is a field currency oblique rate, right? So here you can put the currency like USD, and you can put the manual rate, like say suppose you are putting 84. I'm just trying to post the transaction, what it's saying. Let us see. Company code is 7200. I am putting 84, but automatically taken value is 81, right? I have put it manually. The system will accept, no doubt. Suppose I am paying the salary to foreign technicians or foreign consultants. So this is my basic salary. Put on enter. Once I put on enter, it will give me the alert message, right? What is the alert message it is showing? It is showing that exchange rate 84 deviates from the table rate 81 by 3.70%, right? So what is the table rate? 81. This is the table rate. And what is the rate I have manually put? That is 84. So 3.7% higher. This is 3.7% higher than the table rate. However, if I put enter, the system will allow me to save the transaction. No issues. So this is the way in which you can pass the foreign currency entries. Now we will go to another area where we will evaluate the foreign currency loans. Okay, I am opening the Excel sheet. I will discuss the details, the requirement of foreign currency valuations. Then I will discuss what we are going to do in foreign currency. Okay, foreign currency valuations, right? So foreign currency valuation means any organization, any commercial organization, if it gets loans in foreign currency or vendor from foreign country or customer at foreign country, and there is outstanding or receivable or loan outstanding, then valuation at every valuation at balance sheet date. Balance sheet date is a must as per Ind AS or IFRS or US GAAP, right? So foreign currency valuations is something which is a mandatory area due to the accounting standard. So foreign currency comes from which sources? Normally an organization can get a loan from a foreign country, right? So whenever an organization get a loan from the foreign country, and that loan is obviously a foreign currency loan, so therefore that loan may be normally you know that the loan is for a long tenure, long period. So whenever that loan is outstanding, that unpaid loan is there in the balance sheet, then that must be valuated on the date of balance sheet. Suppose you are preparing quarterly financial statement. So every quarter that has to be, the loan has to be valuated, and any profit or loss on the same loan has to be reflected in the books of account. And on the very next day, the same entry is reversed. So let us take an example. Okay. Suppose I got loan of 1000 US dollar. Okay. I got 1000 US dollar on 15th April 2022, right? I'm doing monthly profit and loss account and balance sheet. So month end, I will pass the transaction. As under. Okay. Suppose on 15th April, one US dollar is equal to say 80 INR. Okay. On month end means 30 April 2022. Suppose 1 US dollar is equal to 81 INR, right? So in this case, whenever I prepare the month end financial statement, I will pass the entry like this: foreign exchange loss debit to bank loan. Okay, bank loan will be credited. So what happened? 1 rupee is the loss per dollar. Suppose the outstanding on 30 April is $1000. So what is the total loss? 1 rupee into 1000, that is 1000 INR. So your company code currency is INR. So this is the accounting entry passed to bank loan. This is bank loan, right? So this entry is passed on 30 April 2022. Immediately on 1st May 2022, this entry is reversed. Just a minute. Okay. On 1st May, this particular entry is reversed. What is the entry? The entry is bank loan account debited. The entry is, say, bank loan account debited to say foreign exchange loss, foreign exchange loss, that is 1000 INR. Okay, so this entry is passed on every month end, and in the balance sheet and profit and loss account, month end balance sheet and profit and loss account, this is recognized. But immediately on the 1st May, that means immediately on the next day, the same transaction is reversed, right? So what is the purpose? The purpose is our balance sheet and profit and loss account should truly reflect exactly what is the value of the foreign exchange on that particular date. Okay, so that is the purpose of foreign currency valuations. However, this reversal procedure is not applicable. However, at year end, no reversal. Okay, that is the principle. Suppose this process will always carry on. However, on 31st March 2022, whatever is the foreign exchange loss or foreign exchange gain, entry will be passed, but that will not be reversed. Okay, the same entry will not be reversed. So that is the that means entry will be passed like this. Suppose there is a foreign exchange loss, entry will be passed like this. Suppose there is a loss of finally 2000 INR. Sorry. So this is the entry 31st March 2023, right? So this is the entry which is passed as at the year end, where there is no reversal. No reversal will be there. This entry will be automatically passed, right? So how this thing is possible? How SAP system picks up the value from the foreign exchange table and automatically it pass this transaction. Actually, this transaction will not be passed manually. No end user has to see the foreign exchange table, use the calculator and pass this entry. Nobody. So what has to do? We do the customization in such a way that it will be automatically reflected. And another thing is, any organization, see, foreign exchange valuation is a topic which is related to your accounting standard, IFRS as well as US GAAP. In India, what the exact foreign exchange rate on the date of balance sheet or profit and loss account has to be taken. Whether that rate is uh, below the date when we get the loan, or whether that rate is more when we get the original loan, that doesn't matter. Again, I am telling you, suppose we take a loan on 15th April 2022. Now, at that time, 1 US dollar is equal to 80 INR. But month end, we found that the USD versus INR, the exchange rate is 81. So it is more than 80. So immediately we pass the entry. Similarly, suppose on 30 April, USD versus INR is 79 rupees. Then also we pass the entry. In that case, instead of GL account foreign exchange loss, instead of the foreign exchange loss, there will be another GL account which is foreign exchange gain, that will be operated, right? So that will be operated for this purpose. Now, what happened? We have to pass this entry in an automatic process, not manually. But therefore, it will automatically pick up the GL account comparing today's rate from the exchange rate table and when the uh, uh, original loan was sanctioned. Okay, so that differentiation it can found out from the foreign exchange table, and it can pick up the values from the foreign exchange table. It can use the appropriate GL and pass the entry. So entire process is automatic process. not to look at the table and not to use any calculator. Entire process is fully automatic. So for this purpose, let us do the demonstrations. I am opening the software. Okay, fine. So now, first of all, I will create 3 numbers of GL account. That is the first thing. So the first is, before creation of any GL account, you have to see the account group. Let us see the account group. One GL account I will create foreign currency loan account. Another GL account I will create as, just a minute, lost internet connection. There is some issues in the internet, na? Am I audible to all of you?
Yes, sir. Now audible.
Okay, there was some issues in between, internet issues, na?
Yes, sir. Yes, sir.
Okay, okay, fine. So some problem is appearing from last yesterday. Okay, okay, I am carrying on. So I will create 3 numbers of GL account first. So for creation of the GL account, before creation of the GL account, I will first see the OBD4. OBD4 is the account group.
Your screen is not visible.
Screen is not visible. Okay, okay, I am sharing the screen. Screen sharing has been just, it was stopped. Okay, tell me. Now screen is visible?
Yes, sir.
Okay. So my, first of all, I have to see my account groups. So this is the account group which I will use for my creation of the GL account, right? So first of all, I will create a GL account for loans. So loans is under the liabilities, right? So let us see whether that liability group has been created for the loan or not. If it is not, we will immediately create, no doubt. So our liabilities start with 1. I have created the group current liabilities, then I have created the group non-current liabilities. Okay, so loan can be very well under the non-current liabilities, starting with 100 300 to 100 399. Let us see. I am changing the company code 7200. Now I see how many GL accounts I have already created under 7200. Okay, these are the GL accounts I have created. So any liabilities I have created, any liabilities, those are under current liabilities. So I will create non-current liability now. So non-current liability, the first one is 100 300. Then click on the with template. Suppose I am selecting it from another existing GL account 100 201 and company code is 7200. Okay, so it is copied from net salary payable. So once it is copied from net salary payable, first of all, it is not a current liability. So it is a non-current liability. So I am selecting non-current liability, right? The second one is short text as well as long text. So short text I am giving as foreign, just a minute, loan within bracket USD, right? So long text I can see, I can write foreign currency loan within bracket USD, right? So this is the description. Click on the control data tab, right? So here only balances in local currency I have to deactivate, and as it is a loan account, so I will change the account currency to US dollar. Why? Because things will be accounted in US dollar because it is a US dollar loan. So therefore the system will automatically change it to Indian currency on the basis of foreign exchange rates. Deselect open item management. Loan account is not under the open item management. Then this is create oblique bank oblique interest tab. Fine, save it. So I am able to create the first GL account, that is foreign currency loan. Then I will create the second GL account, that is called your foreign exchange loss account. Foreign exchange loss account, that is part of your administration, right? 400, 200 to 400, 299 is the range. So let us see how many GL accounts have been created under that range, right? So I see this is the group 400, 200 to 400, 299. Okay, so 400, 200, that is only created under admin. So now I can create another one, 400, 201, 400, 201, right? So I can select the with template 400, 200, put enter, right? Here I will put it as, say, uh, I will give it the name foreign exchange loss, foreign exchange loss account, right? And in the long text I will put it as foreign exchange loss account, right? So then I will go to the control data tab. Here I don't have to select anything. Don't use the US dollar here, because if any transaction will be US dollar and US dollar, then there is no loss. When it is converted into Indian currency, so then loss will be in Indian currency. So therefore don't change it, because it is INR. Loss or profit will be in INR. US dollar is always US dollar, but whenever you will compare the US dollar with INR in different time horizons, then only the loss or profit will be there in INR. Okay, sometimes it is $1 is equal to 80 rupees, $1.81, $1.78, so it is like that. So this is create oblique bank oblique interest tab. Nothing to do, click on save. Then I will go to the third one. The third GL is other income. Suppose there is a gain in foreign currency, so there will be income. So income means the range is 300, 100 to 300, 199, right? So let us see in 300, 100 to 300, 199 how much GL has been created. No GL has been created, right? So first GL I am going to create 300, 100. Okay, I am copying it from another GL 400, 200. I am copying it. So here I have to change the group. The group is other income account group, right? Then it will be having the short text and long text, foreign exchange gain account, foreign exchange foreign gain account, right? So other things are very much same, nothing to change, no change is required. Click on save. Okay, so things are saved now. Now I will go to the next customization. The next customization is customization relating to how the foreign currency valuation will take place. So first thing, from the FI side, I have created three numbers of master data. One is loan account, foreign currency loan account. One is foreign currency loss, foreign currency gain. So three GL accounts has been created, right? So now I am going to the customization of foreign currency valuations, because foreign currency valuation is a end user activity, but this has to, we have to do the detailed customization. So first customization, let us go to the general ledger accounting, let us go to the periodic processing, let us go to the valuate. Okay, then define valuation methods. So foreign currency valuation is a very controversial topic. In some countries, the lowest value principle is applied. That means from last foreign currency valuation to this foreign currency valuation, or if there is monthly accounts, within a gap of 1 month, any kind of loss will be there, then only it will be valuated. If there is a profit, then it will not be valuated. This is a different accounting standard. Anticipate all losses but provide for no profit. But in India, whether every month, while preparing the balance sheet and profit and loss account, whether there is a loss in foreign exchange or whether there is a gain in foreign exchange, immediate entry has to be passed. And on the very next day, beginning of the next month, the entry is reversed. Okay, so this is the thing. That means for different accounting principles, there are different activities, or there are different methods. There can be different methods, but we are not following this. We will use only one method for the purpose of demonstration. So click on define valuation methods. Okay, so there are different valuation methods. So but however, I will create a method for myself which will be used in my company code. So click on the new entries button, right? So here the valuation method I am giving 7200. So FC valuation in 7200. Okay, see, valuation procedure, there are different principles. Lowest value, strict lowest value, always value to, always valuate, revaluate, these are the things. So select always valuate, right? So in Indian context, whether there is a lowest value or lower value than today or more, it will be valuated, no issues. Then exchange rate type for debit balance, I am selecting M. Exchange rate type for credit balance, I am also putting M, right? And there are two radio buttons. Determine exchange rate type from the account balance, exchange rate type from invoice reference. So this is foreign exchange loan. So for loan, I don't have any invoice reference because this is a loan and it is for a long tenure. So here we have to select determine exchange rate type from account balance, right? So this is the thing, from the account balance we have to determine the exchange rate and click on save in your request, right? So just come back. Then the next is define valuation areas, right? So here I will select my valuation area, because I have already told you that if there is a matter of difference in principles between Ind AS, between IFRS and between US GAAP, then your company has to prepare three valuation areas, three numbers of valuation areas, right? So here I will show you only one valuation area for the purpose. Click on the new entries button. Suppose I put my valuation area 72. Okay, 2 digit. Now I will select the valuation method. So this is the valuation method 7200. Then currency type, I will select my company code currency. That means any problem will arise that will be expressed in company code currency. Click on save. Save in your request, right? Then I will go to the next area. The next area is check assignment of accounting principles to the ledger group. I have already told you that if you want to pass the transaction to specific ledger, then while posting you have to select that ledger. Otherwise, the transactions will be passed in all ledgers. Suppose, as per your group accounting principle, the foreign currency valuation has to be made as per the lowest value principles. Okay, but your Indian company, the valuation has to be made always valuate. Okay, because see, I have selected always valuate because our accounting standards say whether there is a reduction and enhancement or your increase in value or decrease in value of the loan as on the preparation of balance sheet and profit and loss account. In that case, we don't have to fear, but we have to value it. So this is always valuate radio button is there, and the accounting principle we have is also exactly matching with that valuation method. Okay, then the third one is check assignment of accounting principles to ledger. So there is a accounting principle 01 and it is linked with the leading ledger. So this is the ledger which I am going to pass the transaction 0L. Okay, so I am not creating three ledgers or three accounting principles. I am just demonstrating one, but it can be three, like your IFRS, US GAAP, or Companies Act. So anything in this case, you have to create many accounting principles and many target ledger group. Okay, so accounting principle 01 is already there and it is showing at the client level, so I can use 01 and 0L. Okay, then assign account valuation area and accounting principles, right? So in this case, I will click on the new entries button, put the valuation area 72 and I will click on accounting principles. Okay, so what are the accounting principles? 10 is the accounting principle for Companies Act, which is already there. So let us see how many accounting principles are there. Okay, this is by default 10 is there, so I am selecting 10 as per the Companies Act. Click on save in your request. So now I will click on foreign currency valuations. Here I will select the automatic posting of foreign currency valuations. That means whenever any foreign currency valuation take place, it will automatically pick off the ledgers, respective ledger. Whenever there is loss, it will pick up the foreign exchange loss. Whenever there will be profit, it will automatically pick up the foreign exchange gain. So this customization has to be done here. Click on the new entries button, click on this, and we have to choose exchange rate difference using exchange rate key, and the transaction is KBD. Then automatically your chart of account is coming. Then put your chart of account name when it is not there and click on continue. Okay, so here I have to create a foreign exchange key. Key is nothing but it is an identification, and if there is any loss in foreign exchange, then automatically I will charge it to the foreign exchange loss account. Okay, 400,201. Similarly, foreign exchange gain account is also there, so I will select the foreign exchange gain account. Okay, so this is the exchange rate key. Mind it, there is a certification question generally asked where we put the exchange rate key in the master data. in master data, GL master data, where we put the exchange rate key. Okay, and this exchange rate key determine the loan account, because here we have not mentioned any loan account, we have put the exchange rate difference key. Now in the SAP system I have to link it to the loan, that is slash n um, fs double g. Okay, so I have to go to and find the loan account what I have created. This is the loan account. I will click on the change button. I will click on the change button, then I will go to the create oblique bank oblique interest tab. It is not there. I will click on the control data tab. Here it is, exchange rate difference key. So exchange rate difference key, I have already created a key which is called USD. You can do anything, 3-digit, alphabetical, numerical or alphanumeric, right? Then click on save. Okay, so the key is already there. Now let us go to the customizing area. Okay, so this is the way in which I have made the classifications. I have made the linkage. So once I made the linkage, then let us open the foreign exchange table and see what is the situation now. So I will go to the SPRO, SAP reference IMG, and I will go to the financial accounting new, general ledger accounting new. Then sorry, I have to go to the exchange rate table, means SAP NetWeaver. So general settings, currencies, enter exchange rate. So click here. Now I have to see exchange rate type M from USD to INR. What is the situation in different date? So this is the latest rate. But in the month of August last, there is another rate. 30 August there is another rate. 31st July there is another rate. 5th June like there is another rate. So there are different rates in different periods. Okay. Now let us pass a transaction first. I am passing a transaction FB50. Okay. So suppose I am getting a loan on say 10th April 2022. 10th April 2022, right? And here I am putting the currency US dollar, right? Then put enter. Now the posting period is adjusted because it is a backdated posting, right? Then I am coming to the GL account. So whatever foreign currency came, automatically we have converted at our banker, and I put bank account here, debit, suppose 1000 US dollar. I am putting 1000, loan. Now I will come to the bank account debited to foreign exchange loan. Okay, so this one, this is credit, amount is star, text is plus, and enter. Okay, then I will click on simulate and I will click on save. Right, this is document number 58. Let us see the document number 58, FB03. So this is document number 58, put enter. See, this is the loan which is showing to you, and it is passed on 1st April. Now if I click on the general ledger view, GL view, things are showing like this, right? Now I want to see the currency in local. This is the document currency or transaction currency. But what is the local currency? Local currency means the currency used as per the Companies Act for this specific company code. Group currency means the group headquarter currency. So now I want to see the local currency, click on execute. Once I click on execute, 1000 US dollar is converted into 72,000 INR, right? So this 72,000 from where it gets, see, this is the rate on 1st April, this is the rate on 30 April, right? So what is the transaction passing date? What is the posting date? The posting date is 10th April. So when the posting date is 10th April, so obviously this rate is applicable. Okay, just a minute, not this rate, 1st April. 1st April is applicable, right? Which is very near to say the transaction which is passed on 10th April, right? So this is the way in which automatically it is taking the value, right? Whenever a loan will be there, automatically it will be converted into INR. Okay, so this is the thing which is there. Just a minute. Okay, fine. So now on the 30 April, suppose we are preparing the profit and loss account and balance sheet. So at that time I have to do the loan valuations, right? So 30 April means, let us go to the table. So 30 April means at that date the foreign exchange rate is more. That means at the time of initial time it was 72 and now it is 75. So therefore let us go and do the valuations, and exactly it will be reversed on the very next day. That means 1st May. Go to the financial accounting. I will go to the general ledger, periodic processing, then I will go to the closing, go to the valuate, then I will come to the foreign currency valuations, FAGL_FC_val. Okay, so this is my company code 7200 and my valuation date is say 30 April 2022. Then it is asking for the valuation area. What is the valuation area? 72 is the valuation area. Then select create postings, and this valuation will be always through the batch input session. Okay, it is not in foreground, it is through the batch input session. Suppose I am giving a batch input session ZZZ. Document date 30 April 2022. Posting date 30 April 2022. Then reversal posting date 1st May 2022. That we have to select. Then select the reverse posting. Now there are two things, open item and GL balances, right? I will select the GL balances. Then select the valuate GL balance, click on the GL account. So which GL account I will evaluate? Naturally this loan I am going to evaluate 100, 300. And exchange rate difference key, it is already there USD. In this GL account also we have already put USD, right? Then click on execute. Just a minute, no document type entered at the valuation method. Okay. So there is something which is left at the valuation method. Document type for the valuation has been omitted. So let us do that and I will come to the screen again. So if the foreign currency valuation will be there, what is the document created and what is the document type? That is important. I have mistakenly left the document types. So error is showing. General ledger, then periodic processing, valuate, define valuation method. Okay, so this is my valuation method. Right here I have to select the document type SA, post line item and save. Right, So this is the thing which is required. That's why it was not showing the complete. Okay, so now again I'm coming back, again I'm posting, because that may not be synchronized. 7200, this is 30 April 2022. Valuation area, that is 72. Create posting, batch input session, anything, suppose triple S I am giving. Document date 30 April, posting date 30 April, reverse posting that 1st May, then reverse posting. Okay, then I will click on, say, GL balances, valuate GL balances. So I have to select the GL account, that is my loan account. 100, 300. Then exchange rate difference key USD. Exchange rate difference key is what? The thing which is assigned in the loan master. Again also I am assigning. Then I click on execute. Once I click on execute, it will say there are 3 numbers of postings. Let us see. Just a minute. There is a data cannot be posted to the combination of S3 company code 7200. Okay, so ledger S3 is assigned to 0L. So let us see whether we have any leading ledger or non-leading ledger. So that is a combination of ledger S3, cannot be posted to combination of ledger S3 to company code 7200. Okay, and let us see in our case what has been happened. SPRO, SAP reference IMG. We have also created one financial accounting new, global settings new, ledgers. Here ledger is there, non-leading ledger. Let us see what I have created. Okay, so what non-leading ledger I have created, let us see. Max Pro M1 and M2. Okay, for M1 I can use this. I have the ledger M1, right? So let us do it for M1. So I have to change somehow. M1 is for the Companies Act. So for the ledger also I have to do some changes. Financial accounting, general ledger accounting, business periodic processing, valuate. Now I have to go to the define valuation areas. Okay, valuation methods. Okay, it's all right. Then accounting principles to ledger. Okay, I have M1 na, so I have to select a new entries. My accounting principle is M1. My accounting principle, I have to create a accounting principle. Let us have the accounting principle. This one, local gap, and target ledger group is M1, right? So this is the thing which is there. M1 is for the Companies Act, and I am selecting the accounting principle 01. Let us see. It is saying entry already exists. Okay, let us see. Okay, let us create another accounting principle. Suppose I am creating another accounting principle, say M1, and target ledger group also M1. M1 doesn't exist. Okay, let us create a principle and come back. I have used different predefined principles, but it is not working. Okay, let us select the accounting, create the accounting principles from this place. Here is the ledger, that is a parallel accounting, that there is a place called parallel accounting. From there I can create accounting principles. I am creating an accounting principle, the same name, M1. Um, now it is principles for Company Act of 7200, right? So save here. So principles I have created. Here also I can link the assign accounting principle to ledger, but I am not doing it. I am doing it in this place. That is assign accounting principles to ledger. Here itself I am doing. Click on the new entries button, M1, M1. Okay, now save it. Then I come back. Next customization also, assign valuation areas and accounting principles. So here I will change the accounting principle because I have created myself M1. So I save here. Then again I come back. So okay, these things are fine. There is no issues in this. So let us go and again go for the valuations. Okay, let us come for the valuations. I'm just making foreign currency valuation new. Let us see, the things have been synchronized. Let us do it on the next month, because April I was trying it, maybe it is there in the memory. So let us do it on the May, and reversal date will be June 1st. So 31st May 2022. Then it is asking for the valuation area. So 72 is the valuation area. Create posting, batch input session, say XXX. Document date 31st May 2022. Posting date 31st May 2022. Then reversal posting date 1st June 2022. Then select reverse posting. Then click on the GL balances, evaluate GL balances. So this is 100, 300, exchange rate difference key US dollar. Okay, let us try it. Click on execute. Right. So now 3 numbers of message is showing and 2 numbers of posting is also showing. Right. So what are the 3 numbers of messages? Click on the messages. See, it is saying batch input session has been created, right? I have to run the batch input session, but before that let us see. The loan is 1000 US dollar. While doing the loan 72 rupees was there, but when I am valuating, the date of valuation is 31st May, it is 76 rupees. So 4 rupees per dollar is the loss. So if when there is a loan of 1000, so exchange rate difference loss is 4000. 4 rupees per dollar into $1000. So what is the journal entry? The journal entry automatically passed in the system is foreign exchange loss account debited 4000 to bank loan. And on the very next day, on the 1st June, the reversal entry is passed. That is bank loan account debited 4000 rupees to foreign exchange loss 4000, right? So this is the entry which is passed. I have created the batch input session, then run the batch input session, system, services, batch input sessions. So this is the batch input session XXX which is created now. Click on process, display errors only, again click on process. Then session overview. Okay, so that this batch input session has been processed. Now the entry is supposed to be passed, and let us see the entry. /n FB03. So this is the document number which is generated, and this document number is generated in a specific ledger group, okay, which is as per the Companies Act. And this transaction is passed in is showing in US dollar. US dollar, there is no loss. Foreign exchange account, loss account debited to loan account. uh, this is the reversal entry which is passed on the 1st June. So I can click on the display currency. Once I click on the display currency, it is showing in INR. What is the posting date? The posting date is 1st June 2022. And what is the ledger group? Ledger group is M1. Okay. So what is the original entry? The original entry is foreign exchange loss account 40. That means debit to loan. Loan is credit. But in the 1st June, I am seeing the reversal entry. So let us see another entry 2004. 2003. Okay, this is 2003. The date of passing the entry is 31st May, and the ledger group is M1. And what is the entry? The entry is foreign exchange loss account debited to loan, right? But it is in US dollar, so there is no loss. It will be converted into INR. See, foreign exchange loss account debited to loan 4,000. So this is the way in which your foreign currency valuations takes place. But in the year end, when there will be year end, the reversal is not required. In this case, you will do everything, but you will not put the reversal date. For example, I am showing you the place, closing, valuate. So this is the screen. In this screen, you have to put the company code, valuation key date, valuation area, everything, but don't put the reversal posting date. While there is a year end means 31st March 2023. So 31st March 2023, don't fill up this reversal posting date and don't select reverse posting, right? Apart from this, other things are very much same. And do the posting in batch input session. You have to select a batch input session, you have to give a batch input session and run it in the batch input. Then you will see that that entry is posted without any reversal, right? So it will be direct having an impact on foreign exchange loans. Okay, so this is the way in which your foreign currency valuation chapter is taken place. So in the next class I will go for a new chapter. Okay, so now I am stopping the discussions. I am sending the video, so do the practice. Good night to all of you.